The latest on insolvencies, statutory demands and winding up petitions, the launch of the UK Infrastructure Bank, and equity investment taken by small businesses reaches new highs. All of this in the latest Business Finance Bulletin. Let's open this week's bulletin by taking a look at the latest insolvency figures released by the Insolvency Service. Now, the reason I take a look at this every month is a good indicator as to how businesses have coped with everything that's gone on over the last 18 months and how they're coping with the return to normality. Well, the latest figures show that in May, 1,011 firms entered into some form of insolvency arrangement, and that was up from 929 firms in April. So we are now more or less for the first time starting to see an increase. Is this beginning of a long-term trend where we'll see an increase in insolvencies? Well, also compared to May 2020, the figure was up by 7%. But more importantly, let's go back 2 years to May 2019, when the world was still kind of normal. Well, here, the insolvencies in May 2021 are still down by 25% compared to May 2019. I mean, obviously, that shouldn't be the case, bearing in mind where we are in the economic cycle. The reason for this still very low figure is, of course, the level of government support that businesses have received. But that's now going to start tapering away. However, one support measure has been given a further extension, and that's the statutory demand and winding up petition moratorium. That was due to end on the end of June, but has now been extended to the 30th of September. So it means that if you are owed money, you can't issue statutory demands where firms are struggling because of COVID debts, or issue winding up petitions. So this is the thing that will continue to hold the insolvency numbers back. Regardless of that, we're starting to see an increase. Now, if you are a firm that is kind of struggling financially, don't forget, take appropriate advice to protect yourself. Go and see a licensed insolvency practitioner, or initially go and speak to your accountant or business advisor just to make sure that you're making the right decisions. So just be mindful. Firms are now starting to get some stress under their belts, and if you are owed money, make sure that you are not going to get caught out. As we know, the UK government has got the target to level up across the country to make sure that the economic recovery is evenly spread. Now, one of the key drivers of economic recovery is infrastructure spending, but that takes huge amounts of money. Where does it come from? Well, on the 17th of June, the government launched the UK Infrastructure Bank. Now, this bank, owned by the government, will have access to £22 billion worth of facilities. That's made up of £12 billion of loans and equity, and also the ability to give £10 billion worth of guarantees to projects. Now, you or I won't be able to access this fund. It is designed to lend money to local authorities who want to make big infrastructure spends, and also lending to larger private projects where there is a funding gap. Now, the idea, of course, is that when you spend in large infrastructure projects, it does eventually filter down to the smaller businesses. So whilst you or I can't use the scheme, we will ultimately benefit by the money that is being pumped into our local economies. So it'll be interesting to see the type of projects that the new infrastructure bank will be targeting and supporting. And just keep an eye out on this, especially in your local area, and hopefully all of us will see a little bit of a bounce in our local economies. Historically, UK small and medium-sized enterprises have been reluctant to sell equity in return for cash to fund their growth plans. Well, the latest annual Small Business Equity Tracker report has been released by the British Business Bank, and this report highlights that in 2020 there was a 9% increase in the amount of money raised by small businesses by selling shares. The total amount was estimated at £8.8 billion. Now, interestingly, in the first quarter of 2021 alone, £4.5 billion was raised. So almost half has been done in a quarter compared to the whole of 2020. So it seems that even more firms this year are turning to equity. Why is that? Well, naturally, access to finance has got tougher over the last 18 months. And so firms are turning to selling shares in order to receive cash for funding. What are the popular sectors? Well, perhaps not surprisingly, it's tech and life sciences. Those are the two ones that are leading the way in terms of amount of money raised. Why is that? Well, these sectors are high risk, and so your traditional lenders are really not interested in supporting it with debt finance, hence then turning to equity to get cash in order to fund their growth plans. So equity, could that be for one thing for you to have a look at if you're looking to raise money? If it is, go and speak to your accountant and they can kind of best advise you on the options to take in terms of the structure, how much money you can raise, and more importantly, what you can do with it. Well, that's it for another bulletin. As ever, I hope you enjoyed watching it. And if you did, please don't forget to give it a like, a share, and of course, subscribe to this channel. So that's it. Look forward to being with you next time. In the meantime, have a great, successful, and profitable week.